Hi, I'm Alex and welcome to the channel. In today's video, I want to talk about recession-proofing your portfolio, how to make sure that your portfolio is well positioned to make you good returns during this upcoming recession, things you should do to make sure you're as successful as possible during this period, and the things you should avoid. I also touch on a couple of the stocks that I'm invested into and why I think they're good stocks to weather a recession, because ultimately, we don't want to end up like this.
And it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account, it didn't do too well, it's gone.
I'm not a financial advisor and none of the information I give in this video should be considered as financial advice. I am, however, a professional investor and I've been doing this for over 10 years. And what I want to share with you in this video is my experience, what I've learned along the way, with the goal of helping you become a better investor and think about these things with your portfolio in mind. Now, this is such an important topic, but it's so easy to ignore when the market has performed like it has over the last 3 months. People get complacent and forget that it won't always be like this. I think when we look at the macroeconomic indicators that are coming out of most countries around the world, it's clear that we're on our way into a recession. GDPs are down massively, unemployment is up significantly, and household disposable incomes are decreasing. And these are all really bad indicators that we're entering a recession. Personally, my investment strategy is all about resilience and growth. As I've shown with data in previous videos, these are the companies that will perform best during any recession and in the long run will significantly outperform the market. So how exactly do I go about understanding how resilient specific companies may be? Well, firstly, I think about the demand and the customers. So what does the company do? What are they providing? Is it essential or is it a nice to have? Does it come out of discretionary expenditure or not? Is it being provided to consumers or is it being provided to businesses? And what is the revenue model of the business? Is it one-off sales of products or is it as a long-term contracted subscription? And what's the price point of that product? And how significant is the price of that product to the customer? The greatest resilience comes from those businesses which are selling essential services to businesses which are mission critical, so the business could not do what it does without that service, and where relative to that customer's cost base, the cost of the service that we're providing is very low. The greatest resilience also comes when that revenue is contracted for long periods of time, and it also gives a strong degree of visibility over those revenues. Now let's contrast this to a less resilient business, one that's selling high price point items to consumers which comes out of entirely discretionary expenditure. Now the second thing I think about is the cost base. What percentage of that overall cost base is made up of fixed costs? Now this is so important to have a good understanding of, and I know I go on about this a lot, but that's just because it's so important to understand. Ultimately, if a cost base is entirely fixed or predominantly fixed, a decrease in revenue will have a greater impact on the earnings than if the same business had an entirely variable cost base. I also spend a lot of time understanding the cash flows. Firstly, CapEx and the split between maintenance and expansionary CapEx. Maintenance CapEx, the CapEx that's absolutely required to be made by the company to keep the business operating as it is, stuff that can't be turned off in a recession, versus expansionary CapEx, CapEx that's being made to help the business grow. Next, I look at the financing of the business. How is the company financed, what debt the company has, and what the payment terms of that are. Now this is so important to understand, especially if you're building your own financial models, which as an aside I have a series coming on very soon, because it enables you to see how badly wrong things have to go before that company may end up in some difficulties. Next up I look at the working capital, and I want to make sure that there's not going to be any problems here from mismanagement. I want to make sure that we're consistently getting cash from our customers over the same period of time, year on year, and that we're also paying our suppliers on the same terms. What I don't want to see is that it's taking us longer and longer to get cash from our customers, or alternatively, we're being forced to pay our suppliers quicker and quicker. That's where in a downturn you could have a cash squeeze that could give you some issues. I also look at the balance sheet for key items. Always like to take a look at inventory and make sure that there's no concerns here. Bad stock building up, for example, and maybe giving us a false picture. And other key line items like deferred revenue and any other key balance sheet items. Look, I know in this video I've only very briefly touched on those things, and I've had messages from people saying they'd like to learn more about these things in detail. So what I will do is I will make videos on each of these independently, but please bear with me on that, it all takes time. It's so great to see that people are interested in learning about these things so they can add that to their investment strategy to make better informed investment decisions. And I know at the start of the video I promised to name some names of companies that I'm invested into that I think will weather this recession well. And again, I've already made videos about one or two of them, and I will make videos about those that I haven't yet done. But companies I'm invested into that I think will weather this recession very well include Microsoft, Atlassian, Salesforce, all of those B2B mission critical services with great visibility and great resilience. One name that I see a lot of people talking about as the next Amazon and something that everyone should invest in that I'm more concerned about the resilience of is Shopify. For me, ultimately, its top line is still linked to discretionary expenditure. Yes, it's performed amazingly well during this lockdown period as stores do shift online. However, as the squeeze on discretionary income becomes greater, people will be making less discretionary purchases, and I think Shopify will be impacted by this. And also, I'm fed up of the comparisons to it being the next Amazon. Amazon is way more diversified and has some really, really resilient areas of its business. Anyway, I'll make videos on each of those covering them in much more detail. If you've liked this video, if you found it interesting, please hit the like button. It's massively appreciated. If you want to see more content from me, please subscribe. And as always, any thoughts, questions or comments you have, please let me know in the comment section below. All support's really, really appreciated. So thank you so much for watching, and I'll see you in another video.